Welcome to Ideonomics. We stick with banks. The ecosystem for banks is getting more dynamic. In the past 6 months, 2 foreign banks and 1 private equity have bought stakes in Indian banks for nearly 50,000 crore rupees. I'm referring to, of course, the NBD in RBL, SMBC Bank in Yes Bank, and Blackstone more recently in Federal. Separately, the Reserve Bank is removing old constraints on Indian banks. For the last 2 decades, Reserve Bank had insisted banks should only lend for capex, that is, create fresh assets, not to help corporates buy one another's assets. Now the Reserve Bank has announced draft rules allowing banks to do acquisition financing. More generally, ECB financing rules have also been eased. Does all this mean more business for banks and more competition? Will more foreign banks be attracted to India? Joining me to discuss whether we are on the threshold of a brave new banking in India, or at least an inflection point in Indian banking, are 2 veterans, Zarin Daruwala, former CEO and Managing Director of Standard Chartered Bank, and Srinivasan Varadarajan, another veteran banker who has done stints in Axis as DMD, before that in ICICI, where he probably worked with Zarin and was in the capital markets division along with JP Morgan. Zarin and Srini, thank you very much indeed for your time. Zarin, for starters, we saw Stanchart and Citi actually reduce their, businesses in India. But now we have 2 banks from different geographies, Japan and Middle East, coming in to buy huge stakes in small Indian banks. Will we see more of this?
So first of all, Lata, I don't think Stanchart reduced its business in India. I'll clarify.
Okay.
It globally decided to exit unsecured lending, and that was a global decision. Otherwise, very much a large presence.
Okay.
Coming to, after SMBC and NBD, will more foreign banks buy? Yes, absolutely. I feel banking is a good barometer for the Indian economy, and we will see a lot of the smaller private sector banks which need more capital, certainly looking at this optionality. Also, I think the segment that we will see more attention coming in a few years is the small finance banks. Clearly, there will be some consolidation that may come through in that segment. And I think the last 2-3 deals are also a sort of reflection of the good geopolitical relationships in India-Japan corridor, UAE-India corridor, and the whole business momentum in these corridors will pick up, which will help these banks in their business in India. And I feel there'll be a trickle of strategic stakes, not a flood.
Oh, okay, trickle. Well, a similar question to you, Srini. On the one hand is the foreign interest, which of course will have to go through this voting rights issue as well. But separately, how many Indian promoters will be willing, sellers, or I'm only referring to banks now, will they be willing to give up a strategic stake to banks?
Yeah, I think if you look at the shareholding of banks, and what RBI tries to achieve is to have a diversified shareholding. And to that extent, you do not have any large shareholder as such in a bank, other than barring a couple of banks right now. So the opportunity for someone to take, and therefore most of these banks are professionally run. And therefore the opportunity for a financial investor or a strategic investor to come in and take a reasonably large chunk, which is broadly around 10%, and in some cases, as we're seeing, where RBI is slightly more liberal, to more strategic stake, where a controlling stake is also happening. I think it's possible, but I don't think so there's any sponsor looking to sell. It is just banks clearly have need for capital, and that capital requirements can be met through incremental issuance to existing investors and domestic investors. But again, if there a strategic comes in and they believe have deep pockets, I think it's useful for the bank from a growth point of view to try and get those investors on board. And I think that's what we're seeing that's happening.
Okay. Well, Yes and RBL Yes has the advantage of being a digital bank. It's a new bank. And RBL has reasonable branches, not many. But, will the ROI be justified for, any global bank? Srini, you go first on that.
Yeah, I think if you look at the geographies from which these investments are coming from, I think these are really cash-rich geographies, and they are seeking long-term investment. And the threshold returns, which possibly they're expecting, is more related to the growth in these entities rather than actual return on equity, which possibly will happen over a period of time. It gives them access to a market and customers which continue to grow, and the visibility of growth is very high. And they will ride the wave through the cycles. And I think that's the way I think both the RBL and the yes transactions have happened. In Federal Bank, I think it's more a financial transaction. I think it's a good, well-run bank, and therefore nothing changes from the way the bank runs, and it's a financial investor coming on board.
Yes, it's only a private equity. It's not a bank. But Zarin, you said that you don't see a flood but a trickle. I mean, it is a long way to build a retail interest in Indian banks, and the giants are already there. The top 5 banks are really big in India. So is that what is making you a little skeptical that foreign capital may not rush in?
No, I think the number of entities which are available or platforms is not that many for a foreign bank to come and, if you take the next tier of banks, they are quite small, some of them like Karnataka, Karur Vyasa, right?
Yeah.
And it's quite possible that some of those entities may not be very exciting for foreign banks.
Okay.
While RBL and Yes were much bigger banks, in the Indian scheme of things.
Huh.
Having said that, if a bank is very keen to have a ready-made platform, then yes, it provides a ready-made platform. But then culture-wise, it becomes a challenge for the foreign bank also sometimes, to sort of revitalize the culture, which is suited to global aspirations.
Yeah, I think in Federal Bank, the advantage was that they got a Stand Chart banker for a good 15 years. And then perhaps even now, it's only a private equity capital. Okay, Srini, time permitting, I'll return to this. But basically, you also agree that there could be a flood of capital.
I agree with Zarin. There's got to be no flood of capital. I think the thing is the visibility of growth is there, and therefore people are interested to invest for the long term or strategic perspective.
So more private equity than banks?
But as you said, I think the return expectations need to be moderate. I don't think so you can expect exciting returns or blockbuster returns from these things in a 3 to 5 year period. It's a long haul. I think foreign banks have struggled in the Indian context, as you said. The top Indian banks have given the foreign banks a run of their money, and clearly building a business here, both wholesale and corporate, both wholesale and retail, has not been easy for foreign banks. So I think it's more having a foothold in a market which is growing and trying to find your way rather than trying to say, I'm going to get exciting returns here.
Okay, fine. Time permitting, I'll return to this. The bigger, excitement for the entire Indian banking sector is the draft rules on providing money for acquisitions. Until now, banks could not do that. They will start from April 2026. Now, the rules are that the banks have to, the limit is 10% of their tier 1 capital for the entire banking system. That comes to about 4 to 5 trillion rupees, not a small amount. And the rules also are that it should be a profit-making bank. It should be a profit-making company whom they are financing, listed and profit-making for 3 years. Zarin, is this opening up a big line of business for Indian banks?
I would say it is definitely a segment which for many years has been close to Indian banks. And to a large extent, most of the M&As were getting funded from FPI or NBFC or AIFs. To that extent, it's clearly an area of opportunity for Indian banks to sort of step in. Having said that, as you rightly said, there are boundary conditions like debt equity ratio of 70-30. Similarly, the acquiring company has to be a listed entity. So there are boundary conditions, and also it eats into the CME exposure of banks, which is not a big headroom that banks have. A lot of banks have, CME exposure is sort of not that much headroom is available. To that extent, it is a new area and it's an opportunity for Indian banks.
Okay. Your thoughts, Srini? It's not just these constraints. Also, as Zarin pointed out, the overall 40% of tier 1 remains as a cap for all capital market exposure. Will banks be interested? Banks have not shown much penchant for corporate lending itself.
Yeah, I agree that I think, again, here also one should moderate the excitement in terms of what investors and outside stakeholders think about what the RBI regulations will achieve as far as the banking sector is concerned. If you look at the tier one equity of banks, broadly, it's around 25 lakh crores. So if you look at 10% of that, it's about 2.5 to 3 lakh crores is what you will get.
Okay.
This is a limit which is not going to increase over the next at least 3 to 5 years. And if you look at any bank, I don't think so they're going to achieve 10% in 1 year. So if you assume they're going to achieve this 10% over 3 to 5 years, and you're talking about 50,000 crores.
Okay.
And similarly, as you said, that ICICI, HDFC Bank, and SBI are almost 45 to 50% of the banking sector net worth. Yeah. So almost if you're 2.5 lakh crores, 1.25 lakh crores is with these guys. So the whole thing is, if one of these guys don't show much interest because other capital market exposures offer them much better returns, the amount of banks financing which can happen for this is much lower. So I would think it's a window which is open for exception trades to happen, meaning some trades will go through where listed entities which are acquiring good targets, I think, and highly rated will get financing. But to believe that every acquisition is going to be financed by banks, I think it's far away. I don't think so business of NBFCs and IIFs are anyway going to be affected by this. I think they play in a different segment. Sponsor financing is a big part of that. Okay. And any acquisition debt, typically good corporates find a way to finance it through entities which offer almost slightly higher than debt financing rate. So sponsor financing is unaffected, and I think banks will slowly scale up. So I don't think so one should expect immediate growth from this. It will be a good start.
Okay. Well, thanks for pouring some cold water into, enthusiasm of the naive. Zarin, what's your take on this? Would you say that, this 3-year listing and 3-year profit should go? I mean, that will reduce the terrain so much. Do these guys, 3 years profit making and listed stocks, even want bank money?
No, so I think, sorry, I didn't get your question.
No, see, the rules are that you can finance acquisition only if the acquirer is a listed company and has 3 years of profit-making record. Such people will not even want money. No, they will have their own money. So do you think this is too restricting a qualification?
I think most M&As, there is some funding because even if a company has surplus cash flow, they may have commitments for capex, etc. So they do come to the market. There are very few who are zero debt companies, like the tech companies or some of the MNCs who don't come for borrowing. So to that extent, I would say even if they're listed and they're profit making, they will access bank finance, stroke NBFC finance for acquisitions.
Okay. Well, I'm not done with my questions. There is another set of
Lata, I just want to add one thing. I think the way I'm looking at how RBI has changed its mindset here is that till now you are trying to tighten NBFC regulations to make it on par with banks. Now it's happening the other way, where RBI is saying, I will relax banking regulations to make it on par with NBFCs. So that process is starting, where you're trying to level the playing field. You level the playing field from one side. Now you're saying from the other side, I will level it.
Okay.
So we'll get to somewhere in between.
Okay, that is actually a headline. Yeah, Zarin?
I'd just like to say that what Srini said, this is a new lane which is created, not an autobahn.
Oh, that's a nice metaphor. It is only a lane that has been opened and not an autobahn for Indian banks. Point taken. Well, I have more questions for both of you on the ECB rules that have been relaxed and whether that opens up an autobahn. Those questions after the break.